Have you ever pondered whether buying Tesla would enable you to retire sooner? Nobody is likely to pass up the chance to retire early, and many individuals think Tesla enables precisely that. Find out how to retire on Tesla shares by tuning in and keeping an eye on the news. Some have claimed that working an ordinary 8 to 5 job will not make one wealthy. Nonetheless, the majority of successful company CEOs put in more than 10 hours a day. However, a normal office worker might not be able to retire early by living only off of their income each month. You're going to learn today how to retire on Tesla shares. Most individuals would be really glad to make a significant sum without having to do any work, especially those who are hustling around simply to earn a few dollars. Even though it appears extremely implausible, if you make the correct investments, you could be able to achieve that. Darren Jung, a Tesla investor and YouTube content creator, recently estimated the amount needed to retire on Tesla shares by 2030. He claimed that 300 Tesla shares will be sufficient to enable him, and possibly many other people, to retire by the year 2030. Most of us begin investing with the intention of being financially free. He claimed to have stated that, in contrast to the roughly $2 million needed for a 30-year retirement, a simple retirement may be attainable with just $5,000 each month. According to Jung, there are numerous things to take into account that could have an impact on his plan. Inflation is one. A 5% annual inflation rate, he claimed, would result in $5,000 having the same purchasing power as $10,000 after 15 years. Although different people have different demands, he emphasized that this may be mitigated by having many sources of income, such as continuing to invest in Tesla stock or taking on sporadic paid job. Most people's wants can be met with a sum of $2 million. Of course, keep in mind that everyone has different wants and habits, which is what will determine whether the aforementioned quantity changes using the bear and bull situations. Given that Tesla CEO Elon Musk anticipates selling 20 million vehicles by 2030, Jung projected what the price of Tesla stock will be at that point. The average selling price in the worst-case scenario, in which Tesla sells only 10 million cars, would be close to the current price of $60,000. Although Tesla might introduce a few more reasonably priced models for approximately $30,000, he claimed that this will be countered by a number of variables. The first is the eagerly anticipated cost for a Cybertruck. The Cyber vehicle is expected to cost roughly $80,000 and will be substantially more expensive. This is the worst-case situation, remember. Another element is inflation, which currently is higher than it has ever been at 5% annually and significantly affects the entire economy. Tesla and other businesses are anticipated to have largely solved the autonomous driving problem by 2030. Notably, Tesla classifies FSD revenue as part of automotive revenues. This suggests that by 2030, assuming the selling price of Tesla's hardware is $40,000, they may recognize $20,000 as FSD revenue, which is equal to an estimated average selling price of $60,000 in a bear case, with 10 million cars multiplied by the average selling price of $60,000 to calculate automotive revenues is equal to $600 billion in revenue, assuming that Tesla's non-automotive revenues earnings per share are calculated by dividing net income by the total number of shares outstanding, which amounts to around $104 billion in income divided by 1 billion shares, or $100 per share, in order to compute the share price by 2030 under a bear catch scenario. The 104 earnings per share is multiplied by a price-earnings ratio using Apple's P/E ratio of 30. A stock price of $3,120 would indicate that Tesla is an established business. The base case scenario has a few minor assumptions that are different. First, let's say that yearly auto sales grew to 15 million from 10 million, which would still fall short of Elon Musk's target of 20 million vehicles delivered by 2030. The net income will rise from 1% this year to 20% the following year. Tesla is increasing production in its factories in Austin and Berlin while maintaining a 15% profit margin. Do you believe you could retire on Tesla shares after the fully operational data factories and greater software margins make up a larger portion of Tesla's revenue? Tesla may well conceivably enhance the net income. Post your comments in the section below. Here is a simple example. Assuming the same mix of non-automotive revenue of 15 is another $135 billion in revenue. 15 million cars times every selling price of $60,000 is equal to an automotive revenue of $900 billion. This means Tesla's total revenue will be slightly above $1 trillion with a net income of 20%. Since there is a net income of $207 billion, The computation for earnings per share is 207 billion divided by 1 billion shares, or 207. Accordingly, the share price would be the earnings per share times by P, or 207 multiplied by 30p, or, in the simplest scenario, a share price of $6,210. Finally, compared to the basic and naked scenarios, there will be a number of adjustments and suppositions in the bull instance and scenario. According to Musk's plans, Tesla will produce 20 million automobiles per year. In the best-case scenario, Tesla's non-auto revenue would rise from 15 to 30%, and its net income will reach 25, which is equal to Apple's net income at the moment. With 20 million cars produced by Tesla and an average selling price of $60,000, the company generates $1.2 trillion in revenue from the sale of automobiles. A net income of 25 that is comparable to Apple's today is 390 billion, and net income earnings per share is 390 billion divided by 1 billion stock, which is equivalent to $390, and the Tesla share price of 290 is multiplied by 30p, which is equivalent to an 11700 share price in a bull case. Tesla's total revenue will be 1.5 trillion. Keep in mind that these estimations are cautious. Tesla's price-earnings ratio is currently 100, which is more than 3 times the 30p used in the calculation that stated that if the P ratio increased from 30 to 60, all 3 scenarios' share prices would double. But if it increased from 30 to 90, still below today's 100p ratio, all 3 scenarios' share prices would triple more. Over with all the calculations completed. Let's determine how many Tesla stocks are required to reach a retirement goal of $2 million by 2030. In the worst-case scenario, with a Tesla stock price of more than $3,000, approximately 650 stocks are required. In the best-case scenario, with a Tesla stock price of more than $6,000, approximately 300 stocks are required. People have different needs, wants, and lifestyles, so different people may need different amounts for retirement. By now, Tesla has undoubtedly established itself in the market, and based on its performance despite the dip, it appears that the EV company will continue to perform well. For this reason, Tesla may just be a good retirement plan in the not-too-distant future. Many Tesla bulls believe in the company's vision of a cleaner, more environmentally friendly future. In order to retire comfortably in a Western nation like the United States, one has to earn at least $4,100 per month. The median retirement income in the United States is approximately $47,500. Overall, based on the information provided, investing in Tesla stock has the potential to make you wealthy and eventually enable you to retire sooner rather than later. However, nothing is certain because there are economic reasons that could cause the company's stock to increase or decrease. The good news is that your money won't run out for a very long time because Tesla shares will increase over time if the firm stays healthy. For investors who aim to retire by 2030, buying Tesla stock is likely the best and most difficult move to make right now. Visit our channel and check out our other videos for more information on Tesla stock.